Time to welcome our market master for the day, Sanjeev Prasad, Senior Executive Director and Co-Head of Kotak Institutional Equities, now joins in. Sanjeev, hi, good morning. Have to start with what happened 2 days back on gas pricing. Are you disappointed that it was deferred for 3 months, and what's your sense? Would it be fair to expect any kind of outperformance from oil and gas sector now after the kind of move that we have already seen?
Well, it was disappointing because I thought it was a done deal. The previous government already cleared it. It was in the form of a cabinet decision. Notification has also come out. So I'm not very sure, what the new government wants to look into now. But, let's be fair, let's give them 3 months and see what they come out with. I assume, there won't be much change as far as the broader philosophy of pricing is concerned. I don't think we have any real option but to give market prices for both crude oil as also gas if you want to see some amount of investment in the country. It's a very simple choice which India has. Either we pay global prices to the likes of Australia and Qatar and import LNG, or we pay some lower prices compared to global prices to the likes of our own companies, whether it's public, private, foreign, Indian, doesn't matter, whoever is working in India, and hope that they can, do investment and increase domestic gas production over a period of time. So I think the choice is pretty simple. I don't know why we're debating so much on this issue. So hopefully, the right decision will be taken in the next 3 months. So that's a disappointment in one sense, but hopefully it's a temporary one. The other important thing to keep in mind is what's happening on the subsidies on liquid fuels, and if you see any movement over there. So diesel seems to be on track, but LPG kerosene numbers are still very high, and given the roughly $5 increase we have seen since the escalation of the Iraq conflict, that could put additional pressure on subsidies as also the fiscal deficit. So I hope there is some review of the pricing over there, maybe similar to what we see in the case of diesel, monthly price increases, both for LPG and kerosene, and hopefully over a period of time we align those subsidized prices also to market levels.
Sanjeev, hi, good morning. So what is the pocket that you would go ahead and buy on this dip? Would it be the oil marketing companies, or do you think upstream like ONGC, Reliance, etc. are still the best options now?
No, we like most of them in this space, and we have been quite positive on them for the last 9-12 months. More on the theme of fiscal consolidation, that India has to get its fiscal house in order, and accordingly fuel subsidies have to come down. As of now, there is not much scope to reduce food and fertilizer subsidies, so the only option is fuel subsidies, and I think we are moving in the right direction over there. I think gas price increase is more of a temporary issue. I presume it will get implemented over the next 3 months. So in general, we are positive on most of the names, but at current prices, I'm more excited about GAIL, which seems like a good operating leverage story, in the sense here's a company with broadly 50% capacity utilization in its pipelines, and as and when gas volumes increase, the operating leverage could kick in pretty significantly. Keep in mind the fact that the tariffs already been reduced to regulated levels for all the existing pipelines, so there's no downside risk from that area. So it looks like a good compounding story as and when gas volumes increase. Downstream companies, we prefer BPCL. And if I look at this company, normalized EPS last year was about 51 rupees. Give about 9-10 multiple, you have about 450 rupees for the as a fair value of refining and marketing part, and you add about 300 rupees for the value of the E&P assets. That's also investments in downstream, the smaller refineries, that's also in IGL and PLNG. So roughly that comes to about 300 rupees. So this could be a 700-750 rupees stock, assuming subsidies go down to zero. And over the next 1 or 2 years, if diesel subsidies go away, I see no reason why the likes of BPCL, HPCL, IOCL and GAIL should be in the subsidy bracket. So hopefully over the next 1 year, these companies will get exempted from paying any subsidies.
Sanjeev, what about the market itself? Would it be fair to expect a pre-budget rally? Are you expecting a pre-budget rally? And what would lead this rally?
Well, I don't know. It's only 15 days away to the next budget, so the market has already done quite well this year. So I'm not very sure whether you will see another leg up until and unless the government comes out with some announcements. Either on the subsidy side, which a lot of newspapers have been reporting, could see monthly price increases being implemented for kerosene LPG also. So that could be a big positive. That could give at least one boost to the downstream company. That's also the likes of GAIL, GAIL Oil and ONGC. Beyond that, I assume most of the policy announcements will now come in the budget. So I think that's going to be the real event over the next 2.5 weeks. Because the broader economic vision has already been announced in various forums, President's address in the Parliament, Prime Minister's speech in the Parliament, etc. And now what we would like to see is the details as to how does this government go about implementing the economic vision. So I assume you will see some more details in the budget speech of the Finance Minister, along with whatever details come out as far as the fiscal situation is concerned. I hope the government announces some sort of a medium-term target for fiscal deficit, maybe let's say 3% by fiscal 2017, and some concrete plans to get to there. I think that would be a real good signal as far as this market is concerned, that finally India can look forward to maybe lower interest rates over the next 12-15 months.
Okay, that 3% target would be welcomed by the street, Sanjeev, but I just have a follow-up to that. There are some expectations that in the government's quest to create allocations for some big-ticket infra projects, the fiscal deficit may actually come in at about 4.3 to 4.4% versus 4.1% in the interim budget. If that comes through, will that be a big disappointment, or will the market just take it in its stride?
Not really. So, as long as you have the components moving in the right direction, I think it's okay. If there is more of, let's say, capital expenditure at the expense, at the cost of revenue expenditure, I think it's pretty fine. Over the last few years, if you see the share of capital expenditure, which used to be almost 20%, 10 years back, that has come down to somewhere about 12-13% now. So that reversal needs to take place, and the only way you can do that is cutting away some of this expenditure which has become somewhat structural in nature. So clearly the government has to move towards reducing subsidies, which won't happen overnight. This is more a 2-3 year process, whether we go about implementing gradual price increases for some of the subsidized products, or we target subsidies better through direct cash transfer. So next 2 to 3 years you will see some improvements over there. And the second thing is on the revenue side itself. I hope over the next 1 year, GST gets implemented, which can boost the tax to GDP ratio, which as of last year had come down to 10%, which is pretty disappointing. This is central taxes as a proportion of GDP. And our economists suggest that if GST is implemented, you could see about 70 basis boost to the tax to GDP ratio. So that's going to be a big mover. So I won't be too worried about the fiscal 2015 numbers. One area of slippage could be given all the carry forward expenditure of 2014 would need to be accounted in 2015. There is something like 300 billion rupees pending on both food and fertilizer subsidies. So unless and until this government also does the same business of carry forward, you could see a one-time pop as far as the fiscal numbers for 2015 are concerned. But I don't think that is a big deal, because that's now moving towards greater transparency. So I would say that more as a positive. And as I was saying earlier, the more important thing is what is the medium-term target and the medium-term plan to get to the target, whether it is on the taxation side through GST, and whether it is improvement on the expenditure side in terms of the mixed improvement between capital revenue expenditure, as also lower subsidies over a period of time.
Sanjeev, the flavor of the day today is pharma stocks making a bit of a comeback. How would you approach some of these names? Because for the last 6 months, it's been all about cyclicals. But would you have overweight stance on pharma, and what stocks would you like?
No, we continue to maintain an underweight stance on pharma, and we'll continue that for some more time. The only name which we really like over there is Dr. Reddy's, based on valuations. Otherwise, the stocks are not as if they have become cheap, unlike the IT companies which have actually come down in absolute terms of the last 6 months. Pharma has not really come off. Barring Reddy's to some extent, most of the names are actually up on a 3 to 6 month basis. So I don't think valuations have still come to a level where I can feel a lot more excited about these names.
Okay, we have one money control query that has come in, so I'm going to quickly ask you this question. Santosh has written to us from Bangalore, and he asked if it is a good idea to remain invested in IT stocks, especially in Infosys. What's the call there?
But I think the valuations are okay. That's the supporting point over here, I would say. It's not as if we are going to see any great excitement in these names in the next 6-9 months, but at least whatever signals we are picking up from overseas seems to suggest that the business seems to be doing quite fine. I mean, you saw the Accenture numbers seem to be on the higher side. So I'm not too worried about the growth as far as the dollar numbers are concerned, but obviously it's always an issue when it comes to rupee. If you again see some amount of appreciation in rupee, then the rupee revenues don't look that great, and that could be a little bit of a problem. But having said that, as I was saying, valuations for most of the IT names are somewhere about 14.5 times on 2016 basis. So from a valuation standpoint, at least there is some amount of comfort. And if you look at the broader market, it's pretty much at similar levels now.
All right, Sanjeev, thank you for your thoughts. We'll let you go on that note. That's the word coming in from Kotak.